Welcome to Oxford Analytica's weekly roundup of key trends in the global political economy. I'm Tom Wales, Deputy Director of Analysis. This week, in our usual tradition, we're focused away from headline events, which are currently centered on Kim Jong-un's various threats to annihilate U.S. bases in the Pacific. Instead, we're going to focus on Russia, and therefore I'm joined by the Deputy Director of Analysis and Chief Russia analyst at Oxford Analytica, Yulia Rusanova. Now, Yulia, we've had a couple of sort of interesting little ripples in terms of the Russian economy. Let's talk first about the shift in central bank policy on Tuesday. What do you think the bank is trying to signal here, and what are key takeaways for some of our clients?
Well, what the bank did on Tuesday is essentially leave the key rates unchanged for the 7th month in a row, but they did cut slightly the longer-term repo rate. Now, while that sends a mildly positive signal to the markets as far as the bank's possible pro-growth shift, I think the fact that the key rates, the refinancing rate, is still at 8.25%, means that the effect will be fairly limited. What is more interesting, I think, is the press release that the bank came out with on that day, mentioning the economic slowdown and acknowledging the rising risks of that continuing. And that could, to me, it signifies that we might see some more substantial rate cuts going forward. So that's as far as the bank goes.
And what does this tell us about how the bank sees the overall outlook for the economy? Are they a little bit wary at the moment?
Well, they've certainly always had, for a long time at least, had an inflation targeting approach. They've tried to downplay the fact that the economic growth has slowed down significantly over the past few months. We've gone from 3.4% in 2012 GDP growth to no growth in February. So they have, and that I think is gradually building up to essentially forcing the regulator to take some measures to countermand that.
So the bank as well also has new leadership. What does that mean for policy going forward? Are we likely to see a significant change?
That's right. Elvira Nabiullina was appointed by President Putin, was nominated by President Putin to replace the current head of the central bank when his term expires in a few months. Now, she's known as to have a pro-growth bias from her previous job in the economy ministry. But I think this particular move had less to do with her nomination, but rather with the economic slowdown that I touched upon. And the fact that really the leading indicators that we are seeing, rail freight volumes, for example, all point to continuing slowdown going forward. Now, for Nabiullina, she is perhaps best viewed as a compromise candidate of sorts. On the one hand, she was not expected. She was not on the short list of candidates that has been revealed by the press, which included people like the deputy of the current central bank chief, who would obviously maintain very strong continuity with the current policies, as well as fairly radical economists who were pushing much more for government investment to promote growth. She does have the trust of President Putin. She was his economic advisor for quite a while. But at the same time, she's somebody who would be accepted by the pro-growth parties, since in her previous role, she did have a fairly significant bias towards that area. Most importantly, I think she's viewed as a very experienced technocrat who is an insider, who knows what she's doing, and I think most likely will continue the current policy of the bank without any significant deviations from it. So that's my view of how she's likely to handle it in the medium term, which is not to say that we won't see any rate cuts at all. You know, as I mentioned before, it will depend much more on the macro situation, but certainly not to the extent that some of the more radical economists might have perceived it.
Now, is there a danger here, though, of excessive Kremlin influence? Is she too close to the president? I mean, some Western investors, particularly on Wall Street, were hoping that Putin would appoint former finance minister Alexei Kudrin, who's converted himself into a sort of semi-dissident, which never seemed, and therefore it never seemed massively likely that he would come back in. But is this something investors should be worried about?
Well, I think we've got to keep in mind that the Russian central bank was really never fully independent of the Kremlin. They've always relied on the chief's political sway, his influence, to moderate their policies. And of all the candidates on the short list, Nabiullina, as one of the more weighty political figures, would probably be the one in the best position to demand and receive much more independence from the Kremlin than the others might have. Which is not to say that Putin is going to be out of the picture. Of course, he is in a sense her political patron. So there's always going to be that connection. But I guess what I'm saying is that the ties between the Kremlin and the bank were always fairly strong, and will continue to be fairly strong. What I wanted to mention, I think, is quite interesting, perhaps even more interesting than the independence question, is the fact that she was allegedly not Putin's first choice for the head of the bank. However, Putin was, in a sense, forced to nominate her to appease the more pro-growth factions of the Kremlin. And the fact that he had to do that suggests that his political influence, his sway among the loyal elites, is really weakening, and his position as an arbiter in the Kremlin is becoming less and less solid, and that warrants concern on a whole different level.
Great. Well, thank you, Yulia, and thank you for joining us. Please join us again next week when we'll take another survey of key trends in the global political economy. Thank you very much.